G'day traders, welcome to your daily market update for Thursday the 21st of May 2015, and overnight we had two major bank minute statements. We had one from the Bank of England and we had the other one from the Fed, the FOMC minutes. Firstly, the Bank of England minutes was pretty much a non-event. We have been delivered some deflationary data that was pre-warned from Carney, and the market didn't really have any other surprises from the comments made. So the market was fairly subdued in the European session and really starting to gear towards the FOMC minutes. The FOMC minutes was something that was highly anticipated. There was a lot of people focusing on that as the interest rate rise, or the likelihood of that, was key focus for the market. And like all really built up events, it can be a letdown, and this was as such. The Fed did have some really positive things to say about the economy, and it did see the recent downturn in data as being transitory, and it reaffirmed that opinion. And we've seen the US dollar initially bounce on the back of that. However, the Fed made comments such as it didn't rule a June rise out, but it is highly unlikely at this point. And they didn't really give any indication as to when they seen an interest rate being possible. They seen China and Greece and other international markets as being a risk, but officials expected moderate growth to resume after the first quarter, and that gave the market a little bit of support. So what we've got out of that is ultimately the US dollar went nowhere, as the market didn't get the answer that it was looking for. It was looking for some indication as to if September or following meetings were any opportunity for them to potentially raise rates. So now time is running out and the market is holding its breath for September at this particular point, and the US dollar is pretty much unchanged. Following that, we do have some data coming out. We did have the budget released for New Zealand, and that was quite positive, as we did see the data come out, and it has shown that New Zealand has delivered some growth rising at 3.3% for the year to December 2014. It's the fastest pace since 2007, and overall their economy isn't doing too badly. The budget maintained their AAA rating, and on the back of that, the New Zealand dollar is having a little bit of a bounce right now. You can see on the charts there, or on the calendar I should say, the HSBC manufacturing has come in still in contractionary territory. A little bit worse than expected, but a tick up from the previous result. Still not impressive enough for the market to really take it on board as showing any signs of stability for the Chinese economy. Coming up in this session, we do have some manufacturing data coming out from the euro. We have some retail sales out for the pound. We have some ECB monetary policy statement. We have some US data for the initial jobless claims, existing home sales, the Fed manufacturing survey, the CB leading indicator. We have Stanley Fisher, and we had FOMC Minutes Williams also speaking. That will affect the US dollar as their input as to any clues on the potential for an interest rate rise. The market will latch onto that if they do provide that information. And we have ECB President Draghi speaking. So we have a fair bit on the calendar, a lot to keep an eye on, as it can manipulate the currency pairs accordingly. And the market is still looking for some information from the Fed, and we may get that from later on when we do hear from Janet Yellen. Friday, the docket, you can see, does have some data coming out. We have some relatively gross domestic product in here for the Germans, but other than that, the docket is quite bare. But we do have President Draghi speaking once again, and we'll see if there's any clues as to the Greece situation and how the Eurozone is going from him. We have Canadian data on the docket, and that will definitely create some volatility, and we will close off the week with a bit of US manufacturing consumer price index. So focusing on today, we've got some European data coming up. We could move the pairs around. Let's have a look at the charts and see what we've got coming up. Firstly, we can have a look here that on the 4-hourly chart for the US dollar index, we have had a rally. We did stall at a previous resistance level and now have pulled a Fibonacci from the highs to the lows, looking for potential support areas here for the 61.8, the Fib 50 level, and I think any pullbacks may find support around this area. We'll wait and see what happens as the sessions roll on and we close the week out. The market could get more and more despondent if it doesn't get any answers from Fed members speaking, and that could create this bit of a pullback here. So we'll keep an eye out for that, and for now we'll have a look at the currency pairs, and you can see that the New Zealand dollar has sold off quite heavily, forming a new swing low. We have had a bounce on the back of the better than budget report that come in not too bad for the New Zealand economy, but we'll see how high it can go before it actually runs out of momentum. And the Australian dollar has broken the uptrend line, and we are now testing support levels at lower levels at 78, sort of 78.70, and the next major support would be 78 cents. The Australian dollar, if it does have a bounce, will probably run into resistance, and we'll keep an eye on that and the US dollar. The Great British Pound has had a bounce here off the FIB 50 level, from pulling from the highs to the lows that you can see here. And we have had a bounce off there and moving higher on the back of some weaker US dollar as a result of last night. And the euro showing pretty much the same. We have had a bounce here off a trend line and off a support level at $1.11. And I've put a support level line here at the historical triple top that could now create some support for the short term. The US versus the Canadian dollars did stall. As you can see here, it has stalled on the downtrend line after a breakout, and we'll have a look at oil prices and see, with a combination of those in the US dollar, if the US dollar does pull back, we can expect some further declines here in the US dollar versus the Canadian dollar, and maybe a little bit of a bounce in oil. US dollar versus the Japanese yen is a far greater bullish story. We have had a breakout of this little squeezing triangle in the short term, but we are still within the longer term range. If we were to really capture this, consolidation, you can see here that we are really and truly still within the major consolidation path. So we haven't really had a breakout that is sustainable for the long term just yet, and we'll see if any weakness comes in from the back of the US dollar. It might allow us to enter in at some lower prices for the long term, should we start to get some news coming out about the potential liftoff in September. So that's it from me today. Keep an eye out for the data, and until tomorrow, trade well.